Hello everybody, Jackson here from the Wealth Squad. Today we'll be talking about a trading strategy that is a pretty fast mover, which means you're not going to have to wait very long to see results. But it's also pretty risky. So let's look into it, right? Let's look into Square. So before we do that, of course I'm on Finviz, looking at stocks with a market cap over 10 billion, oversold under 30 on the yearly time frame, and in the USA. And we have 10 results here. So let's look at Square since that's what we've been talking about before. And you can see right here that Square stock has been slammed lately to the point of, down 40% from the highs. And looking at, some support and resistance here, which we've charted before. It does appear that Square isn't fully done with this drawback. So let's check it. 288 to 158, down 45% now. And this strategy is simply this: buying when the RSI is completely cold, right? And the MACD shows some sort of confirmation. So right now MACD is not showing any sign of confirmation, but the RSI is cold, which means under 30, right? So this strategy would simply be buying and hoping for a short-term rally. So we buy here as an example, sell at 180, just get that quick 2-3 day return, and that's it. And if it doesn't go as planned and it dumps, then we sell out. Now, of course, this is a smaller risk reward ratio just because we're not holding for a couple weeks, couple months. It's more like a couple days, maybe a week at max. Probably not very recommended for anyone who's not staring at their computer all the time. Let's check on another one, eBay. So same thing with eBay. RSI is cold under 30. However, eBay stock is not as slammed as Square. You can see 80 to 63 now, but the low for the year, actually this is not the year. Low for the year would be right at 50. But the RSI does show more signs of at least a little bit of not even confirmation yet, but more pointed towards the upside, just because you can see the momentum starting to shrink up, and then just this past 2 days have kind of reversed that. But RSI is cold, right? And what you want to do is just identify some support resistance lines to buy or sell at. I guess eBay doesn't have too many prominent lines here. Something like that where you could buy right here, sell at a very measly rebound, make 5%, or sell out at like 2% loss. So it's very, very quick. You're going to see how your trade turns out in a couple of days. What we haven't talked about before is like buying around here and then waiting for a full or semi-full recovery. eBay on this hand is not the best stock just because it's not very volatile, right? We're seeing 20% recovery, but on Square we saw 60%, or Carvana. Now we're going to see a lot bigger just because the stock has been moving from 370 to 200 instead of 60 to 80, or 80 to 60. So we could see some more lines here or around here, as well as right down here. This trade is pretty simple. Like you can see, the RSI is coursed down, MACD is pointed down. Even though we're up today, it's still looking bearish for Carvana. But the downside here, 46%, which simply means our easy upside. If we were to buy here, we get 30%. And this disaster of a crash happened within 5 days because each candle is 1 day. 1, 2, 3, 4, 5. fell 30%, or it fell less than that, but we're making 30% back if we were to buy and wait for a recovery, 22%. And that's not even a full recovery. So knowing this, you should be trading the more volatile stocks, which just means you're going to, the instances for you to lose instead of win are going to be, faster and more. But as long as you manage your risk, then it should be okay. What I mean by that, let's say you were to buy it right now at this current price and it falls, you're looking at a 13% or 13% stop loss. And that's pretty dang fast. And that could happen in a day, considering, it fell in one day, it fell 7%, 2 days fell 13%, 3 days fell 22%. And that's in 3 days. So looking at Carvana, it's a fast moving stock, which means you could break your stop loss in one day if it wanted to. However, your upside on this specific trade, we're looking at 13% downside, which is pretty dang high. Upside could be, 20%. Actually, no. We're looking from right here from when we bought it, 27% and 44%. That's still 1 to 3, 1 to 2, not too good. But I'm just saying this is a fast moving trade. If you wanted to take that extra precaution, stay patient, you could be doing what we've been talking about. That's simply, buying on a dip, this is definitely a dip, and holding to a full or semi-full recovery. You're getting 64, it's 80% returns instead of 40 and 20. However, your time frame is going to be weeks and months instead of days or week max. Let's look at some other stocks. You could use this screener, very simple to use. We've looked at it many times. However, just 3 criteria could point you to, we got 10 stocks to choose from here. Let's look at Robinhood, stock at all-time lows. Wow, look at that. MACD about to cross up to the upside, RSI under 30. This does look pretty promising. So let's say we were to start position here at this price, 1876, and we wait for a semi-full recovery. Not even a semi-full, what am I saying? A partial recovery, right? You see 1, 2, 3, 4, 5, 6, 7. What Robinhood did in 7 days, we could hope to get in a couple, right? 26% return, yet Robinhood fell, 30%. Oh no, 1876, 21%, right? In 5 or 6 days. And with the MACD pointing to the upside, which we could see right here, since this blue line is about to cross over the orange, momentum's about to turn green, we could see even a little jump like this, right? This is exactly what happened. MACD crossed over, even though the RSI wasn't below 30. We saw a 10% gain, right, within 2 or 3 days. Right here, we could see a 10% gain within 2 days, or 34% gain and a couple more, or 57, right? It could get a full recovery and we could be making, almost double our money. Full recovery would be insane. But what I'm just trying to say is this fast moving trading strategy could be for you if you like taking risk, because your stop loss may be, if we're buying at 1856, your stop loss could be the low, right? Buying right here, your stop loss could be the low, which is 8% down. And your profit taking, your first price target could be a simply 17% return, or a 28. And if you're risking 8 for 28, that's a pretty dang good trade, especially since we're looking at the MACD and the RSI as both undervalued and, promising. So I hope this video helps. Just a simple trading strategy. Instead of, waiting a couple weeks or months, or maybe, half a year for a recovery, we're looking at days or a week max. Now this does take more risk. Your risk to reward ratio will be smaller, but for that, you have to trade the bigger, more volatile moves. Robinhood, Carvana would be great. You know, eBay on the other hand, not so good, just because even a full recovery at this current price, you're seeing a 27% gain at full recovery. For Robinhood or for Carvana, right? We're seeing 28% for eBay. For Carvana, we're seeing a 78%. Just because Carvana and Robinhood are more volatile, have a higher beta than eBay. So I hope this video helps. If it did, please drop a like and subscribe for videos every Monday, Wednesday, Friday. Thank you.